Brendan Ahern, we keep hearing about China slowing down. Recently, they had a PMI which reached an 8-month low. You run the KraneShares CSI China 5-year plan ETF. That's a mouthful. What's China going to look like in 5 years?
Yeah, Greg, the 5-year plan is China's economic blueprint. Within the plan, they have 7 strategic industries. We invest in those 7 strategic industries. We don't know exactly where China's going to be in 5 years, but we know they're going to heavily invest in those 7 strategic industries, and we hold those underlying companies. That would be the rise of domestic consumption, clean energy, healthcare, urbanization, consumer consumption, consumer discretionary. These are the focal points of the economy that the Chinese government is very much focused on, and we want to hold those securities. What we don't hold are kind of the old China, banks and energy companies, which we feel could struggle in the years ahead.
Now, you also run the KraneShares CSI China Internet ETF. Everyone right now is waiting for Alibaba. Will you get some Alibaba in your ETF?
Yeah, our goal, KWEB holds these e-commerce and internet names, which is one of the fastest growing subsectors within the globe, for that matter. It's grown at a CAGR of 120% for the last decade, according to McKinsey & Company. And we'll fast track Alibaba into KWEB within 11 trading days. So we'll in it very quickly.
And you think it's going to be worth all the hype?
I believe so. You could argue that Yahoo has quadrupled over the course of the last year, and many would argue that's solely driven by the $1.5 billion in revenue that Alibaba passed along to Yahoo in the third quarter alone. We estimate the company will be valued between $125 and $175 billion, with a listed market cap of about $25 billion on the New York Stock Exchange.
And then the third ETF you run is the KraneShares Basara MSCI China A shares, and this invests in mainland China. A lot of the worries about mainland China companies as opposed to Hong Kong-based companies is in the accounting, the governance. We hear about muddy waters attacking a lot of companies, no shares fall. How do you make sure that these shares are kosher? These companies are kosher, I should say.
I think in any investment, single stock risk, you really open yourself up to any issue with a management or their execution around a business plan. We hold 460 securities. Our largest holding is not even 3%. So we want to be highly diversified because we want to provide broad exposure around China today. And that way we feel like we really protect ourselves against any single stock risk. Many people would argue, well, active management, they can do forensic accounting, but then look at the largest holdings. They're probably 5, 6, 7%. We don't want to take that level of risk. So being widely diversified helps protect us around those issues.
All right, thanks a lot, Brendan.
Thank you, Greg.
Thank you for watching The Street.